Goldman CEO predicts a market correction in 12 to 24 months. Goldman Sachs CEO David Solomon issued a stark warning about artificial intelligence investments on Friday, predicting a stock market drawdown within the next 12 to 24 months as the current AI surge mirrors the dot-com bubble of the early 2000s. Speaking at Italian Tech Week in Turin, Solomon cautioned that rapid technological acceleration is driving capital formation that could push market valuations beyond sustainable levels. Amazon founder Jeff Bezos echoed similar concerns at the same event, describing the current AI landscape as an industrial bubble driven by investor overexcitement and inflated valuations. Both tech leaders emphasized that while AI represents genuine transformative potential, the current investment frenzy resembles historical tech bubbles that preceded significant market corrections. Warning comes amid record AI valuations. The cautionary remarks arrived just one day after OpenAI achieved a staggering $500 billion valuation, making it the world's most valuable private startup. The AI company's valuation surged from $300 billion in March 2025 to $500 billion, reflects unprecedented investor confidence in generative AI, despite OpenAI reporting an operating loss of $7.8 billion against revenues of $4.3 billion in the first half of 2025. Solomon explicitly warns that there will be a lot of capital that's deployed that will turn out to not deliver returns, drawing direct parallels to the speculative fervor of the late 1990s. He predicted equity markets could experience a correction similar to the dot-com crash, stating, "You're going to see a similar phenomenon here. I wouldn't be surprised if in the next 12 to 24 months, we see a drawdown with respect to equity markets." Despite the high-profile warnings, major stock indices continued their upward trajectory on Friday, with Dow and S&P 500 futures rising largely due to continued strength in AI-related stocks, including Tesla, Nvidia, Boeing, and Chevron. Tech leaders acknowledge bubble risks. Bezos provided specific context for his bubble assessment, citing an example of a six-person AI startup that received billions in funding to achieve a $20 billion valuation without producing a product. He explained that bubbles occur when both good and bad ideas get funded because investors struggle to distinguish viable concepts from less promising ones during periods of excitement. However, both leaders maintained optimism about AI's long-term potential. Bezos emphasized that AI is real and it is going to change every industry, while Solomon described the technology as very, very powerful when deployed into enterprise applications.